can just take you back to the mid-2000s. I was already working in the telecom sector for ING, but my focus was on the cable operators. So, and remember, there was significant growth in cable at that time, a lot of private equity interest, LBOs all over the place. And I think it was, we were active across Europe in all the countries, and we had one big client that had operations in many countries. And it was probably 2007 that they came to us and said, you know what, there is this, emerging technology, fiber, and we really don't like it as a competition to our cable platforms. So we would really hate you to see getting involved in fiber. And that's the point where we said, there's something going on here. Let's investigate that and what's happening and what's the future of this technology. So we invited consultants, we got ourselves familiar with the business. And then in 2010, it still took us 3 more years, we actually done the first fiber financing in Europe for Regge Fiber in the Netherlands. Now, and then that's really started for the banks, that is the early development phase of financing fiber. And those first 5 years or so, I think it was 7 or 8 banks in Europe that had knowledge of this business, that were financing that. We were coming together in club deals, financing smaller operators. We started working with Deutsche Glasfaser, with MetroWeb, the predecessor of Open Fiber in Italy, for example. And then by, I would say, 2015, the market started to be more mature, and there were more banks coming into the market, there were institutional investors getting interested, and that really started the next phase, I would say, for the banking market and the equity investment market, for an acceleration and scale up of the activities that we have been seeing over time in fiber. And there was one big driver for this as well, except for that it is, of course, great business, but it was the very low cost of capital. Negative Euribor in that period was really driving activities, and significant money becoming available to just anyone that wanted to buy fiber, build fiber, basically. Now, that brings us to 2020, where with COVID, everyone realized it's really, really important that we have very good networks. So that added another acceleration, I would say, of the boom in fiber in the equity side as well as on the debt side. And what I've also seen is that in some countries, the incumbents were already very committed to fiber, in France, in Spain, in Norway, etc. But there was also the period that the incumbents that were lagging said, okay, we also need to accelerate our fiber rollouts in countries like Belgium and Germany, I would say, and even the UK. So there was a significant boom, a lot of money available to anyone, and I'll show a couple of volumes of how that has developed during that period. But then 2022, I would say, the Ukraine war, we saw inflation soaring, we saw interest rates going up, and we also saw that the many business plans that were out there in the period 2018 to 2022, that many of them were not actually met, and especially the penetration was lacking. So we entered the next phase, the phase 3, I would call it. So that was a reset and capital discipline phase, and we're still in that phase today. For us as ING, back in 2010, when we done that first financing with Regge Fiber, we developed a framework how we looked at the bankability of a fiber company. And this is sort of the simplified version of that. First of all, the track record of management, of the sponsor, of delivering on your business plans. Construction risk, demand risk, is there a commitment from an anchor tenant, for example? Is there demand aggregation? Shareholder support. And I think today, where there's many financial difficulties in some of the fiber operators across Europe, that is increasingly an important one. Also for us as a bank, how committed are the shareholders to support the fiber company going forward. And finally, cash flow quality. And where previously even a very small greenfield operator could attract quite a lot of money, today I would really say you have to have some form of maturity in your platform, you have to have penetration, you have to have customers, you have to have EBITDA, and you have to have a very good path to being cash flow positive or the ability to fund your business without external financing or equity going forward. That does not need to be today, it could be in 1 or 2, maybe 3 years, but you have to have that outlook. So this slide shows you how the digital infrastructure loan volumes and the deal flows have developed in the last couple of years. So the upper side of the slide is the global picture. The bottom side of the slide is the EMEA region. Fiber is orange, data centers is the light blue, and the dark blue is towers. On the left-hand side is the volume of syndicated loans. On the right-hand side is the number of transactions over these years. And this underpins the point that I made that from 2018 onwards, basically, there was a significant boom in fiber, especially in Europe, lasting until 2022. What you also see is that actually in Europe, in the last 2 or 3 years, the volumes have been pretty decent given everything that's happening and the distress that some of the operators have shown. But if you look at the number of transactions, you see a decline there. So what we see is bigger transactions for bigger platforms, but fewer transactions. So if you have a relatively small platform, then it's going to be more difficult to attract any equity or debt, I would say. What's also interesting to see here is how data centers have developed, especially in the US. Look at that volume and the number of transactions. Europe is lagging behind, but that is also coming to Europe. And there is a little bit of fatigue, if I'm totally honest, on fiber. And people are looking at data centers, AI-driven, that's really in digital infrastructure where a lot of money is flowing there now, currently. There is still appetite for fiber, I would say, but you need to compete if you attract equity or debt with the sheer volume of data center transactions that we see out there to get attention. So where do we see the market today? And we've color-coded Europe, and the main activity that we see is in the UK, in Germany, and in Spain currently, so the green ones. Now, for the good and the bad, so there is some very nice transactions in many of these countries, but there's also some distressed situations in these countries, especially in the UK as well as in Germany. And that is distracting also from business as usual for banks and equity investors alike. And then there is other countries like France and Portugal and Sweden and Norway where there is activity, but maybe not so much as in the other 3 countries that I just mentioned before. Italy and Denmark are relatively calm in terms of the activity that we see there. So the activity is still there on financing and equity investments on fiber, but what is required is a mature platform, an outlook for positive cash flow, funding your own business, discipline on capex, discipline on financing structures, and there is a significant preference for brownfield mature assets. What is also good to know is at the beginning of this year, 50% of the debt in fiber in Europe is due in the next 24 months. So there's an enormous refinancing wall that is facing the industry that we need to take care of. And again, we're being distracted by restructurings, by refinancings for new business opportunities. But still, there's things happening. And just on the positive note then ending, Vincent, there is still new transactions happening, and I just want to mention 2 significant brownfield platforms. There's a multi-billion transaction funding for wire in Belgium, for example, and in Spain for premium fiber. There's also a 1 billion plus transaction that's been done in the last couple of months. So things are happening, but it really depends on how your platform looks, whether or not it's viable or not.